right, welcome everyone. Happy Friday. Welcome to Cass's Financial Outlook, and I am your host, Cassandra Collin. Today we will be diving into credit cards and different strategies on what you can take so that you can identify which one is the best for you. So we're going to start off with our normal disclaimers. This is not financial advice, and I am not a financial advisor. This is just what did Cass do, and I will be walking you guys through on what it is that I did to essentially get my credit cards, and we will also be diving into different goals and just different things that you kind of need to take into consideration when you are looking around for a credit card, whether this is your first credit card or you're trying to figure out whether you should close yours or you should increase whatever it is that you're in. Some people want to increase their credit limit, and there's just so many different factors that come into credit cards. They can be a handy thing if used correctly. So we're going to be elaborating a little bit more on how to choose the right credit card for your needs. So the first thing that I get asked is, how do I know which one is right for me? Or are credit cards bad? And no, credit cards are not necessarily bad if you're using them the right way. Obviously, if you're just using your credit card and you're not paying them off, then yes, that is bad. You should not be doing that. You accumulate interest, and then that goes into your credit report. So the first thing we do need to make sure we understand is your credit scores. So credit scores do take an impact on the credit cards that you will be qualified for, along with your annual percentage rates. So your interest rates do get impacted based on your credit scores. So you want to first determine the usage and the goals of those cards. So you want to make sure you take into consideration what kind of spending habits you have and what financial goals you have, so that way you know which credit cards will work for you. So for example, are you looking for a credit card that's going to be used for everyday expenses? Are you using it for travel? Do you want to build rewards, or do you want to continue building your history? So once you clarify what you will need it for, it'll help you narrow down your options, right? Because for example, Marriott has their Marriott Bonvoy. That's more of a travel credit card. You also have the Chase Sapphire. That's more of a rewards card, right? Or something that can be used for expenses. Discover has cashback cards, right? Those can be used for everyday expenses because then the cashback is essentially extra income that you're accumulating. Now, the other thing is also interest rates and fees. So whenever I was looking around for credit cards, I was essentially comparing the interest rates on the credit cards, and that obviously is your annual percentage rate, which is known as the APR for short. And then I also looked into the transfer fees. So if I wanted to transfer money from one account to another, was there any transfer fees or cash advances? Some of them charge a percentage and some of them just charge a flat fee. And that can make a difference, right? Because if I want to transfer $1,000 and they're charging me a 10%, that's $100 that I'm paying in fees just to do cash advances, right? And it's just an example. And maybe there's a different credit card company that only charges me $30 flat fee regardless of the amount. So those are things that you could take into consideration when shopping around for credit cards. And I say shopping around because essentially you are essentially helping them make money. Credit cards will not lose, regardless if you always pay your balance on time and you don't accumulate a single dollar in interest. The way that credit card companies make their money is that every time you use that card, they charge the business owners a percentage fee or a fee in general for using credit cards. And for business owners, they'll probably know what I'm talking about, because whenever you go and use a card, that card is being charged a certain amount because you used a card rather than using cash. So that's just a little side note. Now, another thing that you also want to consider is late payment fees. What is the late payment fees? Do they have late payment fees? Which most credit cards do. And then also foreign transaction fees. So with your regular banks, right, like your debit cards, usually they charge you foreign transaction fees. Some credit card companies do as well, others don't. So you do want to essentially look around to see which ones do charge them and which ones don't, because that can be the needle mover of which one I will be getting. Now, I try to choose the credit cards that have the most competitive rates. When I say competitive rates, it means the lowest interest rate and reasonable fees, because I don't want to get crazy fees if I am ever late for whatever reason on one of my payments, which that shouldn't be the case. Whenever you do get a credit card, you should be paying it in full, and whatever it is that you're using, you do want to pay right away. But obviously things happen, so we do understand that there might be a situation where you essentially do have that late payment, and we want to make sure that we're not getting crazy fee for those. Now, the other thing that I always review is the rewards. So, for example, I love my United Travel credit card. The reason why I love that one is because every single time I use that one, I get points. Those points can be used to book flights, and they can also be used to use for hotels. And the fun thing about United Rewards is that you can also use your points to buy gift cards. So Airbnb is one of them, and you can also use it for, I believe, Home Depot. So there's a ton of different cards that you can purchase with your points. And I've actually been able to travel for free with my United credit card. So I think right now, as of today, they have the sign up bonus of $60,000. Sorry, not $60,000. 60,000 miles, not dollars, 60,000 miles. Whenever you get the United credit card, and I have the United Explorer, which is the blue one, whenever you get that card and you have they give you a $3,000 spending threshold, meaning if you spend $3,000, you will accumulate 60,000 miles after those 3 months. So for example, if I got the credit card today, and between now and 3 months, I spend $3,000. After those 3 months are over, I will be rewarded with 60,000 miles. And those miles, again, you can purchase flights, hotels, or you can buy gift cards and use them for something else. But you can essentially buy your flights and your hotels and pay $0 for your stay. Now, I will say that hotels, the thing that is not covered is the resort fees. So if you stay at a resort, those sometimes do have fees that you have to pay on site, and they will charge you per night, per person, I believe, depending on where you stay. Like whenever we stayed at Vegas, like we had to pay for those in person, but everything else, like the actual hotel stay, taxes, everything was covered by the miles. Along with our flights, we used some of the points to cover our flights. And I believe that the taxes on flights are the only thing that are not covered, but everything else you essentially get covered at no cost. Taxes, I mean, it's not much that you pay anyway, but essentially you could travel for free with those. So I always evaluate the rewards programs and the benefits that are being offered by the credit cards, because then that's going to be the reason as to why I get one versus the other. Now, another thing is also cashback cards. So with cashback cards, what you earn from cashback cards, because again, they are rewards, it's not considered an additional income, but it can be an additional income, because if I'm spending $3,000 every single month, and I can put that on a cashback card, and it's a 3% cashback, that's extra money in your pocket every single month. And you can redeem that to pay off your balance, or you can redeem that to go straightly into your direct deposits, like it transfers it directly to your bank accounts. So again, like that extra quote unquote income can go a long way. An extra couple $100 a month for just using your card is still extra money. That's free money that you're essentially using, especially if you're paying off your cards on time and you're not accumulating interest. So that's free money, right? So just consider the different preferences and spending patterns that you can that you already have, and find a card that offers the most value to you. And then again, everyone's rewards and benefits are going to be different depending on the cards that they choose. To me, I love travel, so I was like, I want the United card. Now, that's not the first one that I started with. The very first credit card that I first got was the Capital One Secure. So there's different kinds of credit cards, and the secured credit cards, what those are is that you essentially are playing with your own money. So to get a secured credit card, you do have to essentially put down your own money. So for example, the one I got was a $200 credit card limit, but I had to put down those $200 so that I could use my credit. So the reason why they do that is because they want to make sure that you are going to use your card and pay it off on time. If you have no credit history, that's probably the first one you're going to have to get. And if you don't end up getting one of those, then you're probably going to end up getting one with a really high APR. So you just have to make sure that you do end up paying your balances on time and in full so that you don't get crazy fees. But the reason why I ended up getting the secured one was because I wanted to build history, and I wanted to get that trust from my banks too. Because after I ended up getting that one, then I switched over to the Quicksilver, the credit card that Capital One has, and that's a cashback credit card as well. Now, within your credit cards, they also have travel apps. So I like to compare all of my credit cards if I'm gonna be flying somewhere, I usually use their travel portal to make sure which one has the best rates. Because if you didn't know this, you actually get different rates if you use different portals. So I always check out my United, if I'm flying Spirit or Southwest or Delta, whatever airline company I'm using, I always check their travel portal. And then I check also my credit card portals to see which one gives me the best rewards whenever I use them for travel. So that's another quick hack there. That's something that you don't really see in their disclaimer. That's just something that I kind of came across when I was looking around whenever I book my trips. So that's the very first one that I started with, the Capital One secured credit card. And then I got the Capital One Silver after the secured, because then I bumped up to the silver. And then from there, I ended up getting my Discover cashback card. And I think on that one, I've accumulated a couple $100s just on cashback. So every time that I've used my card, pay it off, and then everything that I have used on that card is, I think, at a 3% cashback. And some things are different. Some are 5%, 1%, 3%. But you can look on their benefits on which ones are what percentage, so that way you know what to be spending on. So for example, maybe one of them has a 3% cashback on gas, the other one has a 1%. So I'm going to use the one that has a 3% because that one's going to give me my most bang for my buck. So that's what I mean by evaluate the rewards and the programs that they offer so that you can see which one is most beneficial to you. Because if you work from home and you're not spending that much gas, and that probably doesn't really make sense to you. Now, the other thing that I like to also check is their travel insurance. Again, I'm a travel junkie. I love to travel. So I will always check which one gives me the most bang for my buck on travel. So when I mean travel, I mean insurance, purchase protection, extended warranties, concierge services. If you didn't know this, concierge services can literally help you for everything and anything. You can literally call them for like babysitting. You can call them for appliances. Literally anything you can think of, their concierge services usually will be able to help you with it. Now, some credit cards have better services than others, but if you call them and ask them for help on almost any topic, they will help you. So that's another thing that you want to review when going over which credit card is best for me. So another thing is, if you don't know what your credit score is, download Experian, download Credit Karma. They might not be exact on what your actual score is, but at least you get an idea of what your scores are going to be around. So your credit scores do make a difference on which cards you will get denied and which ones you get accepted into. Now, another thing with applying to credit cards is you do not want to apply to multiple cards at once. I like to use the 90-day rule. So I'm going to apply to one credit card probably every 3 months. I'm not going to apply to multiple credit cards within that same time frame, because for one, they go on your credit report and some of them do take points, some of them don't. But again, they could be hard inquiries, some of them are soft inquiries, so you do want to take that into consideration. If you're trying to apply for a house or a car loan, then that might make a difference because your score can be impacted. So some cards are designed for individuals with really good scores, right? So you have to have a 720 and above. So applying for cards that match your credit profile means that you're going to be approved, and that doesn't really impact your score in a negative way. So I like using Credit Karma to see which ones I am qualified for. That's actually how I ended up getting my Capital One secured. And then once I started building my credit, then I shopped around for other credit cards and I looked at their requirements, and that's how I figured out, okay, I'm going to get my Discover. And that's whenever I decided, because my score is at a better rate and because I've been building credit history, I have the confidence and I feel more comfortable to apply to another agency to be able to have that extra credit. The other thing you want to consider is also their introductory offers. So for example, some of them have a promotion where for a year they don't charge you any annual percentage rate. So for example, with my Discover, I had 0 APR for the first year, meaning whether I paid on time or not, I wasn't getting an annual percentage rate. But obviously I was paying it off every single month. But that's what some cards have as promotional rates. And right now during the holidays, they usually have a ton of promotional rates. For example, the United credit card, that's why it's at 60, because sometimes it goes down to like 30 or 40. But if you plan to make a large purchase, or or you need to like transfer your existing credit card debt, consider probably getting one of the cards that has a 0% APR, because, and again, you save on interest charges. And after that year, just make sure that obviously you paid off on time, because then sometimes it jumps up to like 21% depending on your score. So that's something to kind of take into consideration if you are planning to like transfer your credit card debt. Now, the other thing too is you want to evaluate your credit limit. So just make sure it aligns with your spending needs. You know, higher limits can provide more flexibility. So that's another thing that I took into consideration. Like my United has the 5K limit and my Discover has a 2K. And then my, I think Capital One has like a 400 or something like that. So just aim for a credit card that is reasonably around your spending needs. Now, that doesn't mean you have to get a credit card that covers everything that you spend money on. Maybe you're just starting off and you just need a Capital One with 400 and you just use that for your light bill, your gas, and your building credit history. And that's totally okay too. Now, I like to also consider credit cards that have flexible payment options, right? So that can also alleviate your monthly budget payments. So just make sure that when you are going through the different categories of which credit card works best for you, you read the fine print. I know it's dreadful. I know it's not fun, but sometimes that can make a difference on reading the terms and conditions. Just pay attention to the fine print, read the disclosure statements. Sometimes there is restrictions on like credit limits or limitations on usage, or like, for example, like you might use your card in a inappropriate way and they might just close it out of nowhere and they might not even tell you anything. So one thing about credit cards is you do not want to close your accounts. So even if you're not using the card, do not close it. So for example, if I were to have my United credit card after the first year, I remember that the first year was free. And then after a year, I have to pay a $95 annual fee. So instead of closing that one, what I could do is I can downgrade it. And you can do that with any card. So if you have a card that has an annual fee and you don't want to be paying that annual fee, you can actually downgrade your cards. And it's not really going to hurt your score in a negative way, because all you're doing is just you're transferring to a different credit card rather than closing and opening up a new one. And that's probably the easiest and safest way to not affect your score. So that's probably something that I would do if I needed to do, instead of closing my accounts, because if you close your accounts, then yes, that does affect your credit history. And the whole point of building credit so that you have better options on credit cards is leaving them open even if you're not going to use them. So maybe you got like a credit card at Forever 21 that you're never going to use anymore and you want to close it. Don't ever use it. Just toss that card somewhere where you're not going to see it. And you don't have to close it. If there's no annual fee, keep it. Now, if there is an annual fee and you don't want it anymore, downgrade it. You can call the number in the back of your card and they'll help you downgrade to a card that doesn't have an annual fee. Another thing that you might want to look into is probably like their customer service. And that's something that I take into consideration. Like, is the customer service going to be top notch, or am I going to be dealing with them all the time? Do they have a like virtual chat box that I can use that's going to help me easily? Those are things that I like to like look into. Another thing is like when you're applying for credit cards, also take into consideration the acceptance rate that you feel you might have based on your score. So for example, if I have a like 600 or less credit score, I'm not going to apply for an American Express. It just doesn't make sense. So you want to make sure that you're applying to cards that make sense to you, which is why I also recommend just having Experian or Credit Karma so that you can kind of see where it is that you fall under, because they do tend to recommend cards that are likely to fit your criteria. And the one thing that I do like about Credit Karma is that it actually pays you $50 if you don't get accepted into it. So that's never happened to me, but I know they have that in their disclaimer that if you do apply to a card that they recommend and you don't get accepted into it, they will give you $50 for essentially the inconvenience. So those are essentially different things that I did when I was shopping around for credit cards. Those are things that you can do, but consider those factors. Just do your own research. Choose the cards that align to your financial goals and your spending habits. Now, I also have this one podcast that I listened to, which was the Money with Katie show. And the reason why I started building credit history in the past was because I wanted to get a car. But now I want to build credit history because I want to get the granddaddies, like the American Express cards. I want to get the Marriott Bonvoy. I want to get the Chase Sapphire. Those are all travel cards. And in the near future, we will be making a podcast on how to travel for free. So I can go into more detail on how it is exactly that I did it and different cards that you can look into if you want to also be a travel junkie and take advantage of all the benefits that they have and maximize their benefits. Because again, you don't lose anything if you're paying off your debt on time, right? If you pay off your credit cards on time and you have cash back, that's a extra income that you're earning, right? That's how I see it, at least. Like, that's free money. And also, if you're getting free travel, then it's like, I'm spending the money anyway. Why not use my credit card where I can collect points, where I can collect cash back and use it for things that I'm probably going to use anyway, right? Because if I'm just using my debit card and I'm not making a single dollar off of that, when I could be using my credit card and I could be making it 3%, 5%, or 1% on every purchase, I would much rather do that. So again, those are the different things that you can use to kind of seek credit cards not seek, but really shop around for the credit cards that make the most sense for you. And the financial circumstances are different for everyone, so just make sure that you are taking that into consideration. And the tools that I like to use personally are, again, Experian and Credit Karma to find out, and also online resources. I read a lot, so I look at the terms and conditions on what it is that will be beneficial for me. So again, that was episode number 3 on credit cards. And thank you for tuning in on Cass's Financial Outlook. I would love for you guys to comment if there's any other topics that you would like for me to cover. We're possibly going to be talking about tax strategies here shortly, because tax season is going to be right around the corner. And we all have different forms that we need to be filling out, and just how to maximize those is going to be beneficial at the end of the year, which for us would be at the beginning of the year on when you're going to be filing your taxes. But again, comment down below, leave us a like, review, preferably a 5-star, but whatever floats your boat. And definitely follow us on Spreaker, Spotify, YouTube. On YouTube, we're at Cass's Financial Outlook. And again, like we mentioned in the beginning, this is not financial advice. This is more on what I did on how to find cards that worked for me. And if you want to use my strategy, go right ahead. And if not, then those are just different tips and tricks that you could kind of take into consideration that could help you figure out what works for you. So again, thank you again for tuning in on Cass's Financial Outlook, and we will see you at our next podcast.